Hello, Gapper Scott here, and this is the Gap Wrap for Friday, February 19th, options expiration day. Let's take a look at the ETFs. I did not trade today's opening gaps. I'll try to alternate between our ETFs and futures guides. So we'll look at the ETF gap guides. And you can see we opened at the UCO zone today. Actually, you can't see that. You'll have to take my word for it. But the spider, let's see, I'll confirm it for you precisely, opened at 110.62, 110.62. So down about 30 cents the UCO zone. Based upon market conditions, about a 70% win rate, profit factor 1.44. Pretty good. Based upon patterns, good win rate, but profit factor about 1. 1 is a dead break-even strategy. It's generated roughly the same amount in profits as it has losses historically. That's not a good thing for a trader. And seasonality was a little bit weak in terms of win rate and profit factor break even. So not compelling, only 1 out of 3 there. Diamonds also open in the UCO zone. Good win rate, profit factor so-so, a little bit weak. Patterns again weak, and seasonality was actually good for the diamonds in this particular zone historically. So it's basically 1 out of 3, almost 2 out of 3 there. Qs open in the UCO zone also at 44.76, small gap down. Very good numbers based on market conditions. Patterns not bad, and seasonality a tad weak or neutral. And market conditions for the Russell ETF open at 62.74 UCO zone. Good win rates. Patterns actually favored the Russell. Seasonality was weak. So basically, all of these had 1, some of them 2 of the factors in their favor, with none really terrible across the board. But none, and taken in total context, the ETFs looked, the futures looked very similar also. Taken collectively, it wasn't a terrible setup. In fact, as I explained in the trading room, there were certainly many worse setups than today's. It just wasn't compelling, so I was going to pass. There were some other risk factors also. To summarize, basically neutral probabilities, opening risk pivot straddles in several of the indices. Seasonality, generally a riskier time, even though it really didn't play out in terms of data I just showed you, because the UCO zone is generally a good zone regardless of seasonality. And a special day. So down gap in options expiration day has been riskier historically, but as I pointed out here, down gaps in the UCO zone on options expiration date, 8 of 14 historically, not great but not bad. Profit factor of 2, meaning it generate more than twice as much in profits and losses using just a 4-point stop, which is unusual. So could have gotten away with a slightly smaller stop based upon this data, and 7 of those 8 had hit the extended target, making profit factor very strong. But again, terribly small sample size, so I thought it was worth noting but not worth trading, and it wasn't compelling enough for me to jump on this train. It did inch me in that direction, I guess, but I think, quite frankly, had it not been for this last note here, I probably would have traded with a small size. The Fed raising the emergency discount rate yesterday after the close, I thought could add some real confusion and volatility after the open, and that just, taken collectively, wasn't compelling. We had one big supporting pattern, the one I mentioned in the last night's video, opening above the high of 2 days prior, shows that momentum is still intact to the upside. So bottom line, not compelling enough for me, but again, not a terrible setup. Let me show you, I'll come back to this, how it played out, and then I'll show you some research for Monday, on the Monday following options expiration day. So here is the 5-minute chart in each of the markets. You can see they all sold off. Actually, they rallied a little bit right at the open. The Russell filled, NASDAQ filled, YM looks like it did fill, the ES did not fill. It was held in check by the confluence here, which was the daily pivot, and I think one of the market profile levels there. I can't remember which one. Take a quick look at the ETFs. See the same thing. Russell filled. Qs actually did not fill. Dimes did not fill. And the spider technically did not fill. So it was only 4 out of 4 had filled through the first, let's see, 30 minutes or so. In fact, 30 minutes into it, we were selling off. We had failed at the pivot level, broken back beneath below the open, and as I explained in the trading room, I generally don't trade on options expiration day. If I do, it's going to be with reduced position size, or reduced position size a little bit, based on market internals being weaker. Seeing us break down below the open without filling the gap, we broke the open by more than 2 points. I expected a bounce off this major confluence area that I talked about, which was a potential concern for this trade, but we were breaking this trend line, which quite frankly I had not noticed. Someone else pointed that out after the fact, but it was a solid setup, breaking below the open, shorting a pullback to the open, putting my stop above the highs of the day, and that little wick right there got me on a tiny day trade, stopped me out. I called it a day. I hate trading on options expiration day because it is a little bit more unpredictable. You have outside influences causing the market to do things that technically wouldn't be happening otherwise. You can see the confluence up above held things in check for the rest of the day, and we finished pretty flat right at yesterday's close. Let's look at the daily charts, and I'll show you some research. So so-so candle, not the strongest candle in the world, did not close above yesterday's highs. We had a doji in the NASDAQ futures, and sort of weak candles. Actually, we did close just above yesterday's highs in the Russell, and the YM was a little weaker. Look at the ETFs. Near doji and the Qs, similar shape among the other ones. So nothing real compelling there, other than we had 1, 2, 3, 4, 5, 6, 6 successive higher lows. I've pointed this out in the past, but I will tell you that the concept of fading, of down gaps being riskier after 3 higher lows sort of goes away the more successive higher lows you get, and they actually become less risky. A little bit counterintuitive. It just tells you there's real momentum here in the market. Even the volume, it looks like, has been pathetically weak. So, and this was options expiration week, so I'm not sure I totally trust it. But on the surface, the trend of higher lows continues. And let me show you some research for gaps occurring on Mondays following options expiration day. Minimum 1 point in the ES historically, and that's it, using an end of the day stop. So this is fading all gaps greater than 1 point in size in the ES, or about 10 cents in the spider, using an end of the day stop and targeting gap fill. And there's the Trade Station Strategy report. So it's happened about 112 times over the past 10 or 11 years, like you'd expect, since they happen once a month. The win rate, a little bit weak, actually quite a bit weaker. Normally the average win rate is about 70%. 70 to 75%. Actually, it's 72% for 1 point gaps. So this is quite a bit weaker, and you can see it's even weaker for down gaps, a little bit stronger for up gaps. But look at the profit factor. That means it's lost more than twice as much as is made. And you can see it by the numbers there. Gross loss is almost twice as much as the gross profits. Trading gaps collectively, both up and down, on the day after options expiration day. So I will rerun these numbers with my minimum 30% of 5-day ATR stop and a minimum of 5 points and a maximum of 12 points, my standard parameters, for members over the weekend, and share that information with members on Monday morning, or I should say, yeah, it'll be shared with you in my Monday morning comments. And let me show you one more thing. Don't forget we have the free webinar on Monday. Let's see, let me log out and you can see it on our calendar. Actually, you could have just seen it from that calendar back there as well. But coming here, the MTG Wizard Overview and Custom Trading Plan. Coach Mike will take you through the Wizard and the Custom Trading Plan. We've got a special offer. You can save $500 if you sign up by end of the month. So he's going to give you all the nitty-gritty on that really awesome program, and sign up for it right here. And there you go. That is the Gap Wrap for Friday, February 19th.